Ugochukwu, it's great to have you on the show today. And I think a lot of people were pleasantly surprised at the numbers that you are churning out so far this year. Of course, the first quarter numbers were good. On top of that, we've seen very positive numbers for the second quarter. Can you just run us through some of the highlights of the positive moves that we're seeing at UBA?
Thank you very much, Wole. It's impressive to know that the results for the year is out and is again as expected. Like we said earlier, you'll note that in 2011, UBA embarked on significant cleanup of the books, and this half of the year, we are now focusing on driving the business. Our investments begin to reap fruits, and if you look at the numbers, you'll see some of the reasons I'm trying to give for this impressive result. We had significant growth from Africa in terms of contributions. In this first half, Africa contributed about 14% in PBT, contributed about 16% in PBT as opposed to 14% in the previous periods. Today, Africa's contribution to revenues has also grown significantly. It is about 22% as opposed to 19% in prior periods. We've also recorded some moderate growth in the loan book, and this has helped to boost our revenue streams, and that's part of what you're seeing in the numbers that we've declared.
All right.
We have also in the period, during the period just past, embarked on significant repricing of the loan book, and that has contributed to about 250 basis points growth in our total loan book yield.
Okay.
During the period as well, we've had...
If I can just cut in, I think one very important point I think it's important to stress here is the cost management. I think that's a positive. It's something that some analysts had alluded to as an issue that they saw with UBA, and clearly you are making some progress there. What exactly are you doing?
Yeah, in terms of cost management, UBA, I think we are seeing very good progress. Our GSS platform is beginning to introduce significant efficiencies in our operations. Today, we've had very good results coming out of that, and also in the repricing of different contracts that we have with our procurement systems are pretty much improved now, and this has led to improvements in our costs to income ratio. Cost to income ratio has improved to about 60.7%, way from 82% in the same period of 2011. And this is largely also on the back of improvements in our network. We've embarked on revamping the network and optimizing the network and different resources within the network as well.
All right, but
and
the negative,
that's what we are seeing.
I think a negative that one analyst did point out, though, was the provisions. They alluded to 1.9 billion. Those are analysts at FBN Capital. And obviously, that has been the big issue around the banks recently. And can you just speak to that? What exactly happened in Q2? 1.9 billion in provisions. Yeah,
I mean, certainly, let me start, Wole, by saying that today our NPL ratio is less than 2.5%. UBA has cleaned up its books significantly and very well. I mean, completely. What we now have is a very small NPL book. In terms of the provisioning, we have obviously, as like I said earlier, we have improved growth in the loan book, moderate growth in the loan book, and the implication of that is obviously you would have increased impairment charges on the portfolio basis, which is akin to what you have as general provision under local GAAP. Right. Once you have growth in your loan book, obviously provisions will increase. And as a bank, we're going concern. So, I mean, we will continuously look at the loan book and assess it for impairments. And once there are traces of impairment, we make the relevant reserves.
No, I hear you. I think the point there really is that many analysts are just spooked about provisions after given what has happened in the past. But okay, let's move on to Africa. You were alluding to that, to progress on that front recently. Some people have always spoken to the fact that some of your investments have not broken even yet. But you are saying clearly that the contribution so far to PBT has improved. Can you just speak to maybe some specific areas where you're seeing the most progress?
Yeah, the contributions from Africa is becoming very significant. Today, about 12 of the subsidiaries have all broken even, and we keep working on the rest of them. And those that have not broken even, we are seeing reductions in their level of losses. One very key area for Africa, as far as we're concerned, is the revenue streams coming out of fee-based income. Significant fees are being made out of Africa, and our loan book is also growing gradually within Africa as we partner with the different economies to improve infrastructure and the rest of it. So we're seeing significant improvements out of Africa. The only thing that we are looking to now is consolidating our business in Africa going forward. Once that is achieved, clearly within the next 1 year, the story of Africa will be very, very obvious to everyone.
All right, so all that said, looking forward into the rest of 2012, what guidance can you give the market with respect to return on equity?
Return on equity, obviously, I mean, to be very conservative, we expect a return on equity that is well above 20% by the end of the year. And then also investors can be sure of a decent dividend coming from UBA.
All right, we look forward to that. Thank you so much, Ugochukwu Nwaghodoh, CFO, the Group CFO at UBA, giving us perspective on the results released yesterday that, like I mentioned earlier, kicked off earnings season in Nigeria.